Okay, recording this video on Sunday, the 8th of October, 2023, just gone 5:58 AM Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I am seeing on my charts. And this weekend, we're going to start off with the tick bar chart on the E-mini, the 13,500 tick bar chart, because finally, we got the exhaustion patterns on the way down. I hope everybody caught this. We had a great rally on Friday, and I'm going to show you how it all set up. So, traditional view of the better indicators, everything to do with volume on the left-hand side, everything to do with price on the right-hand side. We've got better momentum, which is a volume-based momentum indicator beneath the price bars. On the price bars, we have better pro-am, which shows professional and amateur activity calculated using average trade size. And then on the right-hand side, we have better sine wave, the plate of spaghetti beneath the price bars, which is calculating the cyclical activity in 3 different time frames. And when we put all of that together, we get uptrends and downtrends when we have breaks of support and resistance. And this is what we've been looking for on the 13,500 tip bar chart from 3 weeks ago. Beginning and ends of the weeks are marked by these vertical solid yellow lines. And 2 weeks ago, everything started off where we had exhaustion buy, bearish divergence, a couple of those patterns, and we sold off. And this was the exhaustion selling, getting the move going through this 44.60 level here. Bang, getting this move going. Finally, in the second week, we got a little bit of a local low that was taken out here. We had this midweek rally, which sparked a short covering rally. We know it's short covering because we have not had exhaustion sell on the downside. And this is about tricking everybody out of their short positions. We've got all the trailing stops have been triggered by these kind of moves up, 1, 2, 3 of them. Finally, amateur bars at the highs there. And then at the beginning of this week, we start off with blue professional bars at those highs. And we sell off with these blue professional bars into this week's activity. And finally, Tuesday, we get the exhaustion sell patterns, which are the mirror image of the exhaustion sell patterns getting the move going. So we've got 2 of them here. We've got a bullish divergence. We've got a flush pattern, whole bunch of blue professional bars come in, going into 42.60. Bang. Then we have a little bit of rally, and then on Friday we have a test back down and we bounce 100 points from there. Super nice little move. Now there's a sequence to all of these things. The exhaustion patterns come first, the blue professional bars either come with the exhaustion patterns or shortly afterwards, and then finally we put in the pricing patterns that show that low being made. So if I flick to better sine wave, what we've got here, and I'm just going to switch this one off momentarily, you can see this low is being made. We busted through support on the highest time frame. We come down, we make a whole bunch of nice patterns down here, pull back to end of trend on the lowest time frame, pull back to end of trend on the intermediate time frame, so rippling through the time frames, the end of trend, and then finally we put in pull back to end of trend on the highest time frame. And the sequence of these, you can see that the bars are very light for the lowest time frame, a little bit thicker on the intermediate time frame, and very thick for the highest time frame. Pull back to end of trend, pull back to end of trend, pull back to end of trend, and this one comes with beautiful triple patterns. Big things happen at triples. So we got support on the highest time frame, the intermediate time frame, and the lowest time frame, and the lowest time frame also is a pullback to end of trend. So the end of that little trending pattern on the way down, which was set off by the employment numbers for the open on Friday, all of that comes in, the low is in, bang, and we take off to the upside. So based on the 13,500 tip bar chart, I think the low is in. We're going to have another test back down as we go through the other time frames. I'll show you that. We'll work up from the tip bar charts to the 15-minute, 45, and so on, and show that we've still got some correcting activity to work out all of that trendy activity on the downside, but this was super important this week. And we've got a whole bunch of other professional patterns and exhaustion patterns on some markets all come in at the end of this week, and I'm going to show you some of those. But let's just go up through the E-mini charts on the 15-minute chart here. So here we got pullback to end of trend, again rippling through the time frames, lowest time frame, intermediate time frame. It's still pretty strong on the downside on the 15-minute chart because we've overshot that support, and we're probably going to go back up and make a pullback to end of trend on the 15-minute chart in the highest time frame here. Maybe some of the amateur money which is looking over the weekend is saying, yep, I missed the low there, I need to buy in first thing on Monday morning. So we might have a little bit of continuation on Monday morning, but then coming down Tuesday or Wednesday with a pullback to end of trend, testing into those lows, putting in that final pattern on the 15-minute chart. So let's see if we test back into this zone when the 15-minute chart makes pullback to end of trend on that highest time frame. 45-minute chart here, there we got nice bounce, pullback to end of trend, syncing up with cyclical support on the highest time frame, and here's that intermediate time frame. Still got to make that pullback to end of trend testing pattern there. And the 135-minute chart here, we've got a nice confluence. Look at all these blue professional bars come in here I'm not sure what they're doing there. Potentially they're culling it down, pushing it down to pick it up again here, but definitely blue professional down bars down here into that low is a good sign that they're picking up that low. We've also got another pullback to end of trend to put in on the lowest time frame on the 135-minute chart here, because we've got double support, which is good, but we're still below support on the lowest time frame. So this has most likely got to make that pullback to end of trend pattern. And then on the daily chart here, we were talking about the confluence of support levels come in. It's coming on the NASDAQ chart on futures, not come in here yet. We haven't got confirmation, but I'm sure on Monday probably that'll come in. We've got support on the lowest time frame here, that number there. We've got support on the intermediate time frame to come in, and that'll be a nice bounce into that zone. Never got the exhaustion sell on the downside here. It's a pretty good read. The read up here that we had the highs was about 6,000,002, and the read that we had down here at the lows was 5,000,002. So not exactly a mirror image of those, and sometimes on the downside we see exhaustion patterns. I wonder if the news out of Israel over the weekend is potentially going to spook the market a little bit, force that move down. But war in general is bullish for the stock market, so don't be thinking that the news out of Israel is going to be bad for the stock market overseas, at least. Defense stocks in the US, a sector that's going to look strong, I would suggest, over the next couple of days and weeks. We can also tell from the daily chart on the E-mini some timing of when the weakness in the economy in the US is really going to come in. So remember, the stock market is a forecasting mechanism for the economy and business strength in general. And we can see the top that we had up here was made in July. And usually what happens is the stock market is predicting out 6 to 9 months. If you factor in a delay of 6 months to the real economy from this high, what you're talking about is the end of January is when we're going to start to see really bad numbers come out of the US to indicate that we are really in some kind of recessionary period. And if I'm right about the low being made over the last couple of days here and we're going to have a bounce, the length of the weakness that we'll have in the economy is in the region of 3 or 4 months or so. The US stock market tends to be a little bit bullish into the election season. Partly that's because the Fed backs off making any major moves. There's all kinds of stimulus packages that are announced either by the incumbent or the challenger, and the market's trying to figure out what the impact of that's going to be. So it tends to be a little bit bullish. So the real economy, is, my view, is going to weaken come January next year, and then weaken for 4 or 5 months, and then potentially bounce into that November period. But let's wait and see. There we go. That's some views on what's going on the E-mini this week. Tick bar charts all the way up to the daily charts. Let me show you another series of important daily charts here. I'm calling them daily charts, but as I say time and again, these are 3 bars per day session. I like this as a charting mechanism for looking at the longer term trends instead of looking at tick bar charts. So for example, on crude, there are 3 460-minute bars in a day session of the crude market. And I said last weekend's video, watch out for crude, because this is blue professional bars at the highs. They were in here at the lows, buying the dip, buying the crash, and then bang, up here they were taking profits up in the 90s, and now we're down at 82s. So that's a big move down in crude, so watch out for that. But there are some other interesting things that are going on. So 10-year notes has been talking about the crash in the bond market. We had nice triple signals here as we kind of fell off into these lows, and now we have the beginnings of a bottoming pattern happening. We've got blue professional bars coming in with exhaustion sell and bullish divergence down here in 10-year notes, so that's important on the 10-year chart. Gold, which has crashed in the last couple of weeks, similar pattern here. A whole bunch of blue professional bars, exhaustion sell, bullish divergence. Remember, the trailing stop is miles away, so this has got to trail down over the next couple of weeks, but we're starting to put in important volume patterns down at the lows. There's got to be testing into those lows. There's got to be highs broken in order to show that we're in an uptrend, but these are important volume patterns that have happened. One pattern that signaled this week was the corn pattern over the last couple of days has bottomed nicely. We're oversold with background in red, exhaustion sell, bullish divergence. There's a whole bunch of blue professional bars. Yes, we had some early in the piece here. We broke through the trailing stop on Better Pro-Am and triggered our triple long signal here, but this little pattern here, a U-turn by blue professional bars, then followed by a really strong bar over the last couple of days. That was very interesting in corn. So corn's making some important patterns down here. Natural gas. Natural gas has busted up through $3 nicely here, and this is a little bit of a U-turn. So the blue professional bars forcing us down. We have exhaustion sell, bullish divergence, flush, 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 and blue professional bars buying us out of this U-turn here at $3. Bang. So that whole area $2.75 to $3 was the area they wanted to buy, and now we're busting out at $3.33. So let's see if we get a nice rally starting to build in natural gas. So I've shown you crude, natural gas, corn, gold, 10-year notes. Silver might catch a little bit of a bid with gold. We had blue professional bars come in here. The volume exhaustion pattern is slightly different here on silver, but worth taking a look at with gold over the next couple of weeks setting up. And then lastly, Bitcoin on this daily chart. So 480-minute chart, there are exactly 3 of these bars. And it doesn't look dissimilar to that natural gas pattern with U-turn happening here. We've got our exhaustion sell, our bullish divergence. We're oversold, background in red, blue professional down bars here, and then blue professional bars buying it here and here. So almost U-turning it out of that sequence, and we've had a triple signal on this highest time frame on Bitcoin. So that's interesting on those longer term charts. Let us look at the triple signals on the tick bar charts. So we start off with the Forex charts with the euro first. No signals this week, but 2 weeks ago we had a nice short signal into this move down here. The reason why we didn't get a triple signal here because we did have exhaustion sell and bullish divergence and a flush pattern here. This exhaustion buy signal got in the way as this move got going. So you have blue professional bars buying that breakout. That was very important. Come back into test into that zone, bounce off that. Couple signs of strength here, here, and here. Bang, and we can wait at the races on the euro at the moment. British pound did signal beginning of the week and midweek here, and we've got quite a few blue professional bars into those highs. So let's see if the British pound keeps on rallying this week. Aussie dollar, we got this signal midweek, but it's in the wrong place because we didn't have exhaustion buy and bearish divergence here setting off into these lows here. And we didn't get a reversal pattern on the Aussie dollar because we didn't have it oversold. We had everything else: exhaustion sell, bullish divergence, blue professional bars, break out of that trailing stop. We come back to test and we bounce off there nicely, but it wasn't an oversold. So that's why we didn't get a triple signal on the Aussie dollar. Lastly, Japanese yen. Yep, we did get a signal, 2 signals this week at these lows. Before that, just crazy day for Japanese yen. I don't know what was going on there. There was some smart money buying into that low there with those blue professional bars. That was really important. And then they just triggered a whole bunch of stops here with that move. And now we've come back into test into that zone. That 67.4 is going to be absolutely key here. And we've had a triple long signal here. The exhaustion sell low is back here. So not a classic looking signal on Japanese yen. So then the Emini, we had nice signals short at the end of last week, bang into this low, and a reversal signal long after Tuesday's activity there. A little bit of jiggery pokery and testing back there, but we've had the rally now on the Emini and 10-year notes. 10-year notes, that was a nice signal short here. These ones went nowhere last week. A whole bunch of blue professional bars come in, they sell it down. Interestingly, on the 10-year tip bar chart, I wouldn't say that we've got a whole bunch of blue professional bars coming in at the lows, although on the daily chart it did look far more interesting with this sell-off happening here with the average trade size. So we haven't had that on the tip bar charts yet. Nice signal there that came in, not a conventional signal by any means, but it caught that little overbought area. Blue professional bars sold off pretty hard. But let's see if we test into the lows and just see if we get a reversal signal on 10-year notes. So gold, silver, and Bitcoin. So gold continues to sell off at this point here. I'm not sure why we didn't get a triple signal there. It's definitely oversold. Exhaustion, sell, bullish divergence, flush patterns come in. It could be that this was too far away because we actually put a bar limit, number of bars, limiting the distance between the signals here. Typically that's 250 bars. So that must just be out of that window there for a signal on gold. That's interesting. Silver. Silver, yep, we did get signals down here. Those are nice. At those lows, that one we talked about last week, a little bit of a spurious signal because it was based off that exhaustion sell, which was getting the move going. And then Bitcoin. Bitcoin last week signaled those lows down here at 26.5. Nothing this week, but super volatile on Bitcoin at the moment. I think until we prove ourselves and get out of that 27,000 to 30,000 area, Bitcoin's just going to be very difficult to trade. So crude, not good signals here at the beginning of the week, short there. Those only came in because the exhaustion sell signals were getting the move going. But now, down here at the lows, at least we've had the exhaustion sell, bullish divergence and flush patterns come in. but no blue professional bars for a while, so that's not signaled yet, and the trailing stop on Better Pro-Am is miles away, so crude not ready for a little bit of a rally until those come together. Here's natural gas, and that signaled really 2 weeks ago. A whole bunch of signals at 285 got this move going. That doesn't look like a good signal because it's based on that exhaustion buy getting this move going. So that's natural gas and copper. What did copper do? Well, copper followed equities this week. There we go. It's not a classic again. That's exhaustion sell getting this move going. And is that exhaustion sell finishing the move off? Not really. It should have happened closer to this peak or this peak. But anyway, it did signal long on copper this week, which is interesting. And then let's look at the ags with corn. Corn, yep, signaled 2 weeks ago, and we got a really nice break on corn. I've shown you that on the daily chart. Soybeans this week signaled down here, these lows, but not a whole bunch of blue professional bars at these lows, so not a terribly convincing signal there. And lastly, wheat. Yeah, nice little rally this week, but it didn't come with a signal down here at the lows. That's because we never had exhaustion sell. The exhaustion buy here, the exhaustion sell came on this retrace here. So a little bit of a mixed bag with the triple signals this week. But I think the important things are all happening on the longer time frame charts, with things like lows being put in on the equities market, potentially 10-year notes, potentially the euro, British pound, Aussie dollar, and so on. Those are really interesting markets that have bottomed. And natural gas, Bitcoin, corn, all of those things are looking interesting on the longer time frame chart. So plenty to do and think about this week. So hope everybody certainly didn't get caught out by Friday's rally in the E-mini, and hopefully everybody was positioned long and took a chunk out of that nice trending day. So there we go. Hope your trading is going well and looking forward to next week's trade.